Roblox is making billions in revenue, yet they're bleeding money faster than a bucket with holes in the bottom. Their Q1 2025 report showed $1.04 billion in revenue, up 29% year-over-year. But they're still reporting massive net losses between $977 million and $1.037 billion for 2025. Picture a massive cruise ship taking on water while the crew celebrates record passenger numbers. That's Roblox right now. With 97.8 million daily active users and creators earning a record $281.6 million in a single quarter, you'd expect financial stability. But the numbers tell a different story. Let's dive into the math that reveals why this digital empire could be facing a 2026 collapse, despite those surface-level growth metrics. The billion-dollar paradox. Think about Roblox for a second, a company raking in over $1 billion. You'd assume they're swimming in profits, right? Actually, they're losing money faster than they can count it. I know it sounds completely backwards, but the numbers don't lie. Let's look at what Roblox actually brought in. Their Q1 2025 revenue hit $1.04 billion. That's serious cash flowing into the company. They saw 29% growth compared to the same period last year. Most businesses would kill for that kind of growth rate. But here's where things get weird. Despite bringing in all this money, Roblox is projected to lose between $977 million and $1.037 billion in 2025. They're making billions but losing billions simultaneously. It's like earning a fortune only to be robbed by invisible thieves every month. The financial reality simply defies conventional business logic. This situation resembles a leaky bucket. Imagine Roblox pouring billions of dollars into the top. Their revenue from games, Robux purchases, and premium subscriptions. But instead of filling up, the bucket has massive holes where money pours out even faster than it comes in. No matter how much more they pour in, the bucket never fills because the holes keep getting bigger. When we break down the math, it becomes concerning. Roblox expects to bring in around $4.3 billion in revenue for 2025. With projected losses around $1 billion, roughly 23% of all money they make vanishes. It's equivalent to working 5 days a week, but giving away Monday entirely for free, every single week. This problem extends beyond Roblox. Uber grew tremendously, but lost over $16 billion between 2016 and 2020 while their revenue skyrocketed. Amazon spent years burning cash in their early days, losing money quarter after quarter. The difference? Amazon had a clear path to profitability. Their losses were strategic investments that eventually paid off. With Roblox, the roadmap to turn things around remains unclear. Snapchat reported similar issues. $1.7 billion in revenue, but $1 billion in losses in 2019. These companies bet on the grow now, profit later model with varying success rates. The stock market reflects this uncertainty. Roblox's stock chart resembles a roller coaster, swinging from highs near $47 to lows around $25 in the past year alone, almost 50% drops and jumps. These wild fluctuations indicate investors can't decide if Roblox represents the next big thing or a money pit. Are these normal growing pains? Maybe Roblox is investing in their future with temporary losses? Their executives suggest this narrative. However, examining the financial reports reveals something more concerning. These aren't one-time expenses. The losses are fundamentally embedded in their business model. Their operating expenses grow year after year. In Q3 2024, these expenses jumped 16% compared to the previous year, faster than some revenue growth areas. When costs outpace income, the trajectory becomes problematic. It's like getting a raise, but immediately increasing your spending by even more. Another red flag. Roblox has consistently lost money since going public in 2021. This isn't a temporary situation, it's a pattern. And these losses aren't shrinking. In some quarters, they're actually increasing. This persistent pattern suggests less investing for growth and more a fundamentally broken business model. In everyday terms, imagine running a lemonade stand where you spend $1.23 to make and sell $1 worth of lemonade. You could sell 1 million cups and still lose money on every single one. That's essentially Roblox's current situation. More sales translate to more losses. So is Roblox really losing money despite billions in revenue? Absolutely. The financial statements confirm it clearly. Evidence suggests these aren't temporary growing pains, but systematic operational issues. This matters significantly because Roblox isn't a small startup with years to burn cash. They're a major platform with millions of users and thousands of dependent developers. If Roblox can't plug their bucket holes, these stakeholders will eventually feel the impact. The biggest leak appears to be Roblox's massive creator economy. They've built an impressive platform where people create games that millions play. These creators earn serious money, turning Roblox development into full-time careers. Great for creators, but a significant financial drain for the company. When users spend on Roblox, a substantial portion flows directly to creators. As Roblox grows, these payments increase. Their success directly amplifies one of their biggest expenses. Unlike costs that become more efficient at scale, creator payments remain tied to revenue. They don't decrease as the company expands. They face a paradox. Growth is necessary to satisfy investors, but growth itself doesn't solve their underlying profit problem. It's a uniquely challenging position, even among tech companies struggling with profitability. The creator economy money drain. Let's talk about that first massive leak in Roblox's financial bucket, creator payouts. In Q1 2025 alone, Roblox paid out a record $281.6 million to developers. That's over $3 million every single day flowing out to creators. And this number keeps growing quarter after quarter. This represents a dramatic increase from just a few years ago, with current quarterly payouts now exceeding what developers earned in entire years previously. Behind these numbers are real success stories, like Alex, who started coding on Roblox at 16 and now employs a team of 12 people building experiences that millions play every month. Roblox built their entire business model around these creators. They don't make most of the games and experiences on their platform. Independent developers do. Roblox provides the tools, infrastructure, and audience, and creators build the content that keeps users coming back day after day. It's actually pretty genius when you think about it. Instead of paying thousands of employees to create content, they crowdsource it from a global community of developers. When this system works, it's a win-win. Creators get access to millions of potential players without needing to build their own marketing and distribution. Roblox gets tons of fresh content without having to create it themselves. Users get endless new experiences to enjoy. But there's a catch. Roblox has to pay these creators, and those payments are growing at an alarming rate. The growth curve of creator payouts is accelerating faster than Roblox's overall revenue. In Q1 2025, creator earnings made up approximately 27% of Roblox's total revenue. That means for every dollar Roblox brings in, 27 cents goes right back out the door to developers. This percentage has been steadily climbing from 24% in 2021. Each percentage point represents tens of millions of dollars bleeding from Roblox's bottom line. What's even more striking is the success of top creators on the platform. Over 100 Roblox developers earned more than $1 million in the past 12 months. The top games like Adopt Me, Brookhaven, and Royale High bring in tens of millions of dollars annually. The creators behind these games have built entire companies around their Roblox success, with teams of developers, artists, and marketers. This success story is amazing for those creators. They've built careers and businesses on Roblox. Some have even become millionaires before turning 21. But for Roblox's financial health, it creates a challenging dynamic. The more successful these creators become, the more money flows out of Roblox. Understanding how the money splits between Roblox and creators is important here. When users spend Robux in a game, creators typically receive between 50 to 70% of that revenue, depending on how it's priced. The exact percentage varies based on the type of purchase and other factors, but the key point is that Roblox keeps less than half in many cases. Compare this to other platforms. Apple's App Store takes a 30% cut of all transactions. Valve's Steam takes about 30% too. These platforms keep significantly more of each dollar spent than Roblox does. Roblox has painted themselves into a corner with their generous revenue share model. If they tried to increase their cut now, they'd face massive backlash from creators who have built their livelihoods around the current splits. The expectations around creator earnings keep rising too. As the platform matures, developers expect more stable and generous compensation. Many creators now rely on Roblox income to pay their bills, employees, and business expenses. They've made career decisions based on Roblox's payout structure. Any attempt to reduce these payments would likely cause an exodus of top talent from the platform. We've seen how creator backlash can damage platforms before. When YouTube changed their monetization policies, many creators publicly criticized the platform, and some even left. Twitch faced similar challenges when they adjusted their subscription revenue splits. Platforms depend on creator goodwill, and once that trust is broken, it's hard to rebuild. For Roblox, the math is becoming concerning. If creator payouts continue growing at their current rate, they'll exceed $1 billion annually by the end of 2025. That's $1 billion that Roblox brings in, but doesn't get to keep. And unlike most business expenses that can be trimmed during tough times, creator payments are directly tied to revenue. Roblox can't easily reduce these payments without undermining their entire platform. This creates a structural financial challenge. As Roblox grows, their creator payments grow proportionally or even faster. It's like having a pay raise that's immediately offset by higher taxes. You make more money, but don't necessarily keep more. The company has tried to manage this through different monetization strategies like premium payouts, new ad formats, and brand partnerships. But these initiatives haven't fundamentally changed the core financial relationship between Roblox and its creators. From a business perspective, Roblox has created an amazing distribution platform for indie game developers. But their generous revenue sharing means they're left with smaller margins than comparable tech platforms. The viral success of creating this developer ecosystem has come with a hefty price tag. And this is just the first major leak in Roblox's bucket. The second leak might be even more challenging to address: the enormous cost of maintaining a safe platform for millions of young users. When you have 60% of your users under the age of 16, safety isn't an option. It's an absolute necessity. And it comes with a price tag that grows with every new user who joins the platform. Safety and infrastructure, the hidden money pit. The second major leak in Roblox's financial bucket is actually hiding in plain sight. When most people think about tech companies, they imagine servers, software development, and maybe some marketing costs. But for Roblox, there's an enormous expense that doesn't show up in flashy marketing materials or investor presentations: safety infrastructure. Here's something crucial to understand about Roblox. 60% of their users are under 16 years old. This demographic reality creates a massive financial responsibility. When your platform is filled with kids, safety becomes an absolute necessity that costs a fortune to maintain. Roblox must invest in safety at levels most other platforms don't. They're essentially running a digital playground for children, which means they need the digital equivalent of playground monitors, safety inspectors, fencing, cameras, and emergency response teams. This translates to enormous spending on content moderation. Roblox employs thousands of people whose sole job is reviewing user-generated content. Because they're dealing with child safety, they need trained specialists who understand the unique risks children face online. Every game, virtual item, chat message, and user profile needs potential review. With millions of interactions happening every minute, this requires both human moderators and sophisticated AI systems. Consider what happened in 2018 when a child's avatar was virtually assaulted in a Roblox game. The incident made national headlines, terrified parents, and required immediate response from the company. They had to quickly identify the perpetrators, remove the offensive content, strengthen their filtering systems, and rebuild trust with millions of concerned parents. This single incident likely cost them millions in emergency response, system upgrades, and damage control. Without robust safety systems, such incidents could become commonplace. The AI systems themselves represent another major cost. Roblox has developed custom machine learning models to detect inappropriate content, potential grooming behavior, scams, and other risks. These systems require specialized engineers, massive computing resources, and constant updating to stay ahead of bad actors. The scale is staggering. Roblox processes over 4 billion chat messages daily. Their automated moderation systems scan every message in real time to catch anything inappropriate before a child sees it. Even with extremely high accuracy rates, millions of potential violations require human review monthly. Beyond content moderation, Roblox maintains extensive parental controls, age verification systems, reporting tools, and educational resources about online safety. Each system requires development teams, support staff, and ongoing maintenance, continuous investments that grow with the platform. The infrastructure costs extend beyond safety features. Roblox runs one of the most complex gaming backends globally, maintaining a platform where millions of unique user-created games run simultaneously. This requires sophisticated cloud infrastructure with exceptional reliability. Server costs alone are astronomical. With 97.8 million daily active users, many spending hours on the platform daily, the computing resources required are massive. Unlike companies that can reduce service during slow periods, Roblox needs high availability 24/7 for their young audience. The global nature creates additional complexity. Operating across hundreds of countries, each with different regulations around child safety, data privacy, and content standards means Roblox needs regionalized safety features, content moderation teams familiar with local contexts, and legal compliance staff for each major market. In Europe, GDPR imposes strict requirements for handling children's data. In China, content standards differ dramatically from those in the United States. Each region introduces new compliance costs that multiply with global expansion. These safety and infrastructure costs don't scale efficiently with revenue. If Roblox doubles their user base, they need to approximately double their safety infrastructure. There's no economy of scale that suddenly makes moderating content or maintaining servers cheaper at size. The complexity increases with scale. What makes these costs particularly difficult to address is that Roblox can't reduce them without compromising user safety. Cutting back on content moderation could lead to harmful content reaching children. Reducing server capacity would create laggy gameplay experiences. Limiting safety features could trigger regulatory actions or parent backlash. These costs represent the minimum viable investment needed to operate a platform for children at Roblox's scale. Unlike discretionary spending that can be adjusted during financial challenges, safety infrastructure is mission critical. Any major incident involving child safety could devastate Roblox's brand and user trust. While Roblox doesn't break out their safety and infrastructure costs specifically in financial reports, industry analysts estimate they spend hundreds of millions annually on these systems. As their user base grows, these costs grow in parallel, creating a permanent drag on profitability. This safety infrastructure represents the second major leak in Roblox's financial bucket. But there's a third leak that's potentially even more concerning: Roblox's massive, ongoing bet on the Metaverse. While other tech companies scaled back their Metaverse investments when economic conditions got tough, Roblox doubled down, pouring billions into a virtual future that might never pay off. Betting the farm on the